Good afternoon, everybody. Happy Monday. It's 12:40. My apologies. I did not get a video out last week. I tried. I made 2 videos and had some serious technical difficulties with Loom uploading. So I was not able to produce a video. Hoping this video goes smooth and it uploads correctly. I'm going to jump right into it. I've been on multiple chats all of last week, texting. I've been doing a lot of trading throughout the day, and just to set the backdrop, this is not a conducive environment for swing trades or holding right now. You're either day trading quick or you're buying long term. You're not doing any intermediate swings, because if not, you're getting killed. I'm going to jump first things first. Let's jump into the NASDAQ. Okay. So clearly in a downtrend here, we're below all the major moving averages. The days of up are very minor volume. We've had the majority of the days that are down or higher volume and on, which are distribution days. We took out the November low. This thing looks like it's rolling over, in my opinion. However, you got to stay flexible and optimistic. I will say this, that there is going to be a lot of counter trend rallies over the next couple of weeks. Days that have big snapbacks like this. Even during the overreaction from the tariff stuff, you had large snapback days, right? It's very common, and usually you get them in bursts, either like 1 or 2 days. You see the sequence three, it happens. You had a big one here. So those days are counter trend rallies. You can trade those, and you could be intelligent enough to catch the meat on the bone. As William O'Neill says in his book, you don't really buy for swing trading till the 3rd or 4th day, because that's the follow through day. And that tells you that it's not just short covering. I actually think it's the 4th day is the follow through day. So with that said, the market is basically flat on the day. Jerome Powell spoke at 10:30 today. That was not anticipated. Let me fix my chair here. That was not anticipated, actually, today, his speaking. Nothing what he said was revolutionary. Essentially, everything he said was kind of par for the course. He mentioned job numbers. He mentioned inflation data. No indication whether rate hikes or rate cuts. I will give you my opinion is that this market, what we initially thought that we were getting with expanding multiples with rate cuts, it looks like it's off the table. I think it's off the table because, one, we're not getting the GDP numbers that we would like. The war in Iran is causing serious inflationary measures. You've got a situation where oil is going up, obviously, as you can see, crude oil today at 102, very volatile. And so that's inflationary. It makes everything else go up with it. As inflation goes up, you can't really lower rates. So what we thought we were going to get, we're not going to get. That concerns me for the intermediate. Long term, as an investor, I'm never going to get a bet against American companies. We're a capitalistic country, and our stock market always goes up historically. So if you're a long-term investor, you're probably enjoying the pullbacks and adding to some positions, which I added one today to my IRA, which I haven't in a long time. So the opportunities lie there. However, if you're a short-term swing trader, part of what I do is swing trading momentum. This is not conducive for that. Only unless if you're seasoned and you know how to short stocks and you know how to pick some stocks for counter trend rallies. Now, with that said, I look for stocks during these corrections and these down moves that have relative strength, that are holding up better than the market. That, to me, is the indication of the ones that are going to come out of the end. An example of that would have been Robinhood. Robinhood was one of the first leaders back last year that bottomed and came out stronger from the tariff tantrum. So I bought Robinhood here, and I basically sold it. It's entirely here somewhere. I don't know. I got like a 3-bagger almost. So you start making your list now, and when it presents itself and they set up, those leaders will show themselves and you can buy them. But with that said, I am still trading this market. So let's jump into it. Bitcoin, I'm not going to go. Bitcoin is 67. If you recall, I bought a large spot position at 67. I'm flat and nothing to write home about. As I mentioned, oil up again today. The Strait of Hormuz is the talking point because of what's going on with the war. I don't really understand that. It seems like we've turned our attention to opening up the strait but the Strait was open before the war. So I'm not really understanding what's going on in that regard. I mean, I know what's going on. And by the way, Iran is making 3 times the amount of money selling their oil than they were 2 months ago. So prior to the war, they were making less money than they are now after the war. So if anybody thinks that we are the advantage, I think Iran has some serious advantage of us in that regard. Though granted, if we wanted to end Iran without going into anything related to that, we could absolutely end them. We are the most powerful country, so we could do that. I just think that the way this is being played is weird, to say the least. I pulled up a funny little thing here. So Trump holding up your technical analysis is no match against my tweets. Isn't that very, very true? At this point, technicals don't mean shit. His tweets do. At some point, the market's going to stop reacting to his tweets like it did with the tariffs, and it'll capitulate, and it probably will go back up. It could be a couple days, could be a couple months, could be a year. I got another illustration I wanted to point out, and I found this interesting. This was as of Friday. This is the put volume to calls. This was on Friday. This was actually quite interesting to me. Usually this indicates a short-term bottom. So I pulled up that illustration because it got out of control on Friday. So take that for what it's worth. The market as a whole, like I said, I gave you the backdrop of it. All right, so let's go into what I'm doing and what I'm trading and what you could look forward to for the week. As I said, Powell spoke earlier. It was nothing. So the first thing I'm going to say is I bought Microsoft this morning in my IRA. I might be a little early. There might be a little bit more downside to this. I don't have all the indicators pulled up. It's at like the 200-week MA. I thought it was a good opportunity to add. I haven't owned this in a very long period of time. I see this as a good risk reward. So I started a position in my IRA. Whoop-de-doo. Nothing to really write home about. More importantly, what am I trading? Okay, so I'm going to go through the names that I'm long first and the ones that are on my watch list and what you can do and what you can't do. This is not financial advice, but rather for educational purposes. I bought Dell. I sold half my position on Friday. That was here. I had a great trade. I still have the other half. Wish I would have sold that half. I gave back 3%. I made a little bit over 10% on the first trade. I do not think this is actionable right now. If you want it to confirm for you guys, if you want to watch this as a trade, you need confirmation above this. Damn it. You need confirmation above this wick, like 175. So I had a good trade there. I'm still in a half position. Intuit, I am in Intuit again. If you recall, I did catch the bottom here and I did sell it here. I had a good trade. I got back in. I'm down 3 or 4%. I'm okay with this. I have an 8% stop loss set in my trading account, and I have it also in my IRA that I just added to. I removed some names last week, like I think United. It just wasn't working out. And I think I sold half of a position of something. I don't recall, but I had a good trade of something. And I had proceeds left over from when I sold Palantir and Hood earlier this year, if you recall, in my IRA. So I used some of those proceeds and I bought into it at Microsoft. Anyways, I have it in my trading account. I think this is actionable. I like Intuit. I like their business model. And it's tax season. I think this is good for a trade. So yeah, I'm down. With that said, I'm down like 2-3% on that. Fastly, I still have a half position on Fastly. Again, another name I wish I would have cut into. I cut half of this on Friday and now look 7% down. I do think this is going to find support at this 21. So if you're interested in trading this, I would look for some support there for a quick trade. I had a great trade up here. I mean, I was up like 15%, sold half, thinking this could have a counter trend rally on Monday. And I gave back. I mean, this half that I'm holding now is only up like 5 or 6%. It is terrible. Just pointing it out since I'm holding it. Let's see what else I'm in. I'm still in Trade Desk. This was a small trade. This is a swing trade. Look, I'm not advocating to go out and buy this. I think the low is in or close to in for this. This is a good risk reward. I mentioned that the CEO bought $100 million worth. He was also the one to sell the stock a couple of years ago when it topped. I like this guy's trading ability. So anyways, I still have that position. I am down by the record 5%. I set a 10% stop loss on that. Oh, gold. I did get back into some gold names. Let me pull that up. So gold has had a pickup. So it did the swoosh down to the 200. Hold on. Sorry, had to pause it. Swooshed down to the 200. I got back in and started a heavier position here. I think I got down 2%, and now I'm back to, I think, green slightly on this. I did have a other half position. So I'm still, I think gold is safe. More so, I like the names that I'm in, like GLDI and GLD. I also own hard gold, but I like GLDI because it doesn't have much NAV erosion and it pays a pretty handsome dividend. This is not something I'm trading, so to say, trading at 160, it paid a dividend, whatever it was. I like this. It pays something like 22% yearly. It's a good way to have exposure for people that are, but keep in mind though, this got thrashed when it came down. GLD, I also own this. This is more so of a trade for me, and I have precious metal gold. So I am still in that, and I think in this environment with the war, I'm just being completely honest. I do think gold is going to thrive during these times, and I think we're going to see new high in gold in the coming months. That is my opinion. We have a weak, the dollar is, I'm not going to go into the dollar and everything like that. TGTX is one I own in my IRA. I'm just pointing this out because this is on my watch list. I'm sorry, no, I got into calls on this on Thursday. So far, the calls are up. This is a name I like. I actually think the bio sector is going to do well in the coming weeks. I think it's going to be the strong sector that comes out of this correction. So I would keep an eye on this specific sector. These are the names here if you want to scan it and look for names that you like. I obviously look for things with high volume, making new highs. That's how I scan. But anyways, just pointing that out. I own that in calls and in my IRA. And then I own IMNM still. I don't own a lot of anything. This has just been curling down. I kind of wish I would have sold this, but I'm okay with it. I understood the assignment with owning this for this year. And I think in my trading account, that is it. I don't think I own anything else in the trading account, do I? No, I am. So I did take a short on. All right. So first, SQQQ is the way I've been playing this thing for protection. I did add this on Wednesday. I'm up on it because the market's shit. This is a triple short on the Qs. This was protection hedging. I still have this position, by the way. I have not sold this. I am up on this probably, I don't know, 8-9%. This is more protection for me than anything. So just pointing that out. I think that's all I own. I still in my IRA, like I said, Microsoft, Amazon, Visa, Open, Bros, AMD. I think that's it. I don't think I own anything else. I still have BTCI, which is the Bitcoin in my non-capital or my capital spillover account. I'm going to point a couple things out here. So the memory stocks have been the leaders. They are getting absolutely killed. Micron getting, and I like Micron. I was forced out of it last week on my stop loss. It sucks. I lost 8% on this trade. Down again today, almost 8%. Thank God I sold that one. SanDisk, another huge leader in the market, down 5%. And SanDisk is holding up better. I want to see if these can form bases and come out of this. This sucks. The reason I say this sucks is because these memory stocks were really pushing the market higher, and they were the sector that I liked a lot. Just pointing this out. Okay, I'm back. I'm sorry, I had some technical difficulties. So I was saying SanDisk and Micron were the leaders in the memory space, and they're just getting absolutely killed. Don't be a hero and go out and buy these. I know some people like to they like to bottom fish these things. Not an intelligent decision, if you ask me. Okay. Let's see what else we got. Oh, so I traded this morning, Palo Alto. I caught this on a trade early in the morning. I would put this on your watch list if you're a swing trader. This was a huge insider purchase from the CEO. He bought, just south of $10 million. That spun this up. This is actually forming a nice little cup here. Broke down with the handle. I want to see if it can make it above here. So put that on your watch list. Now, I kind of went through what I've got. I don't own anything else. What I am trading is going to be TQQ. I had a trade this morning, so I had a trade. Doesn't reflect here. I actually bought this Friday. This morning, it was up about 3%. I sold this, made 3%. Whoop-de-doo. I got back in it. I'm down about a half a point. So my advice is this reflects the QQQs on a 3 times forward. So this is more so to catch a counter trend rally, which I'm doing whenever the market jumps. So again, somebody would ask me, but Jack, why are you in TQQ and SQQ? One's short, one's long. TQQ is a trade for me to catch pops. I'm going to trade that once, twice a day, sometimes more often. You could potentially swing it on days that the stock market kind of gets thrashed and you think we're oversold. Maybe potentially swing it. SQQ is more of a hedge and a downside protection. All right. Oof. Oh, wanted to point a couple things out. This is more for educational purposes here specifically, is bonds are getting killed. Corporate debt is getting murdered. I always talk about under the hood, how important this is. This is a really, really bad sign. Hate to be, here's another one. The high yield bonds, just not good. This is when debt starts to go, like when it's going this way in debt, that's when you start to get some concerns. So, as well as I wanted to point out the RSP equal weight also getting killed. This means everybody's participating, which is not just an America thing. The rest of the world their markets are getting killed too. So it's not us, just for the record. Okay, so here's my closing for the day. There are stocks that I think you can short. If you're interested, I'm not advocating Palantir, but this really looks like it's rolling over. And admittedly, I did take this on a short on Friday. I know I had one successful short already on this. If you recall, a couple weeks ago, I did really, really well. I think it was somewhere in this range. I caught like a 10% move. I think there's a couple stocks that look like they're rolling over. Hood, as much as I love this stock, I mean, this is clearly a downtrend. Now, you're not going to buy, but you see it keeps getting killed at the moving averages. This is one you can short. I know people don't want to hear that, but I think it's going down. I think some of these things are overvalued. I mean, I talked about iron and like this is another one. This is getting killed. I mean, I have a buddy who shorted this on Thursday. He's up already like 10% on this short. All of these stocks that have these valuations. I mean, I think another one was Cipher Mining. I mean, just an absolute piece of shit stock. I don't even know where it's at. I think it was Cipher, whatever. I don't know. Cipher Mining's another one. There's a bunch of these names. They're speculative. There are strong names. I think you need to look in the biotech sector. I think that's going to do well. And I think you need to put together some of your list to come out of this and be aware of that. If you want to trade, my suggestion is your trades are very quick. If you want to trade, that's the only suggestion I can make for you. I would not just start jumping in the stocks. I think we are going further down. That is my opinion. I could be wrong and I am flexible, but this is a horrendous looking chart. I see nothing positive. Shit GDP, crappy job numbers, inflation going up in a war. None of that is positive for me right now to start jumping into a bunch of stocks. So that's all I got for you today. Wish I could be of more positive news. I hope you guys have a great week and set your stop losses if you are trading.